Good morning. Happy Tuesday, January 5th, 2020. This is your host, Dan Russo, Chief Market Strategist at Shaken Analytics, bringing you stock market today. Going to look at sector relatives as we do every Tuesday in my note and on this show. Stock market today brought to you today and every day by Shaken Analytics. Head over to shakenanalytics.com/today. Sign up for a free email. Follow along with this show. Get daily stock ideas to consider. U.S. equities lower on Monday, rather. Stocks unable to hold overnight strength. Treasuries were mixed with some focus on the fact that the 10-year break evens briefly pushed through 2%. One sign of that inflation theme that I've been talking about for quite some time. Dollar recovered from earlier lows against the yen and euro. Gold finished up 2.7%. WTI crude down 1.9%. Energy was the only sector to finish higher on the day. Interestingly, in a down tape, defensive sectors, REITs and utilities were the worst performers. As we get to the desk this morning, S&P futures are up 20 basis points after Asian markets were mixed overnight. South Korea, the standout, Greater China and Taiwan also posting gains. However, Japan did lag once again. European markets are fairly flat. Treasuries are mostly weaker with the curve steepening. Dollar weaker against the yen and euro. Gold up 10 basis points after that big spike higher yesterday. WTI crude up 40 basis points. Let's kick it off on a Tuesday. Would have liked to have been a better start to the year. However, not a ton has changed here. Nothing's changed, actually, from a trend perspective. S&P 500 still has support at 360. Key support at 340. Above 340, we play for 413. No change to that view. Qs, 260 is key support. 300 is important in the near term. We've talked about why 300 is important. We don't want this to be a false breakout. We want to hold 300, stabilize, and then continue to work higher. So therefore, 300 on the Qs is important in the near term. IWM 170, then 160, rolling over a bit, maybe some de-risking, some repositioning of portfolios. Obviously, we have the Georgia runoff tonight. It's going to be in focus. Historically, elections have not been that big a deal, in my opinion, for markets. I mean, remember 2016, if Trump wins, the market's going to crash. Well, that didn't plan out. And then remember when President Trump told you that if Biden wins, the market's going to crash here in 2020, and that didn't pan out. Obviously, some nuance under the surface in and around the runoff, but ultimately, I don't see it as a huge catalyst for the market. No change to our trend views as the new year begins, and that is unchanged from what we had to say yesterday. Let's hit our market in a minute. What are we writing about in the note today? Well, stocks lower to start the year. However, semis closed higher on the day, and that's a bullish data point. At the same time, defensive sectors continue to lag the broader tape. Yesterday, REITs and utilities, your weakest sectors, but even from a trend perspective, and throw staples in as well, we'll look at the chart a little bit later, just a complete disaster on a relative basis. So to me, maybe some position squaring to start the year. I think ultimately the trends that we've been looking at and talking about have remained in place. So not a ton to say that's different. Oil services set to continue the uptrend. I think so. Futures point to a higher open today, as I said. Let's hit the power bars now. For the major indices, the Dow loses 1.1%, 3-1 bulls to bears. S&P down 1.3%, sees a weakening in its ratio, 113 to 65. Nas slight underperformer, 17 to 12, bull to bear there. Small caps in line, performer to the downside, 805 to 158, bulls to bears there. Bonds down tick, sending yields higher. Shaken power bar, small cap stocks are somewhat more bullish than large cap stocks. Major markets across the board are mixed. Let's do it. Tuesday, bullish screen idea. And this one's fairly simple. I'm looking for bullish relative strength changes. Russell 3000 is a starting universe. I want names that have a Chaikin power gauge rating of neutral or better. And quite simply, not a lot of nuance to this one. Relative strength turned strong this week. That's it, right? Shift in relative strength, what we call a personality change. You've heard me talk about it. You know the importance of relative strength. So where is relative strength either emerging or reasserting? And do we want to use that as a starting point for idea generation. And just to give you a hint, I realize it's a little bit small, but just to give you a little hint of what that looks like, I highlighted Synaptics here, SYNA. It's a semiconductor stock that is breaking topside from a consolidation. The stock went nowhere for a year, and now it's breaking out. You know, the analyst who covers it at Needham was speaking positively about it recently. But check out relative strength down here at the bottom, and here is that personality change. Relative strength turned strong in the past week. Boom. That's what I'm looking for. 20 names here, you know, some banks, right? Some energy names, a lot of some of the stuff that we've been talking about. As well as semiconductors, which are important, right? Some retail in the mix as well. So take a look. It's a great starting point, I think, for idea generation, potential new leaders. You could layer in some other factors such as money flow or technical factors that you think make sense. But I think this is a pretty interesting way to build watch lists, right? Where is the emerging relative strength, especially with the market in an uptrend, right? Emerging relative strength are names that are outperforming a strong market or outperforming a market that's in an uptrend. Those are the types of names I want to be paying attention to. So take a look at that one here today. I will note Synaptics is overbought in the near term, but it is breaking out. So who are you as a trader? You know, do you buy oversold or do you buy breakouts or some combination of the two? I'm just highlighting what a relative strength change looks like. I do happen to like the stock though. Sector movement last 5 days, major sectors of the market, healthcare top of the list, materials, energy. So healthcare is kind of interesting because it's been a dog. And in my note, I basically call it a dog on a relative basis, but that's healthcare broadly. We have to drill down. You know, there are pockets of healthcare like biotech and equipment, which we'll look at equipment in a little while, that are solid. Financials in the top 4, call it flat to down slightly. Discretionary use staples, middle of the road. Comms, tech, REITs, and industrials towards the bottom of the list. Industrials are testing my nerve here a little bit, or testing my patience a little bit on a relative basis. I touch on that in today's note. You should definitely be taking the free trial to see this. Infra tech at the bottom of the list, we want to see tech pop. Obviously, the biggest sector in the S&P, we want it to do well. REITs at the bottom of the list doesn't really bother me. Defensive group, no reason for that to be doing well or outperforming in a bullish tape. We want to see it do well. We just don't want to see it outperform. Industry and focus, healthcare equipment services, past 6 months, been a leader, outperforming the S&P by 6%. Power bar ratio looks at future potential is strong. 15 to 10 bulls to bears there, currently ranked number 17 of 21 subsectors. Names that might make sense: OrthoFix, OFIX, very bullish. Hillrom, HRC, very bullish, and Natus Medical Incorporated, NTUS, very bullish. All holdings in a fund that is up and to the right, XHE, bullish rating. Here's that ratio, strong trend above the rising long-term trend line, solid outperformance. This is what I'm talking about, right? If you just look at healthcare, healthcare looks terrible on a relative basis. You have to drill down. You have to take a look at the industry groups and say to yourself, where's the weakness? Where's the strength? Where do I want to be positioned? Healthcare is one of those groups where you have to do that. It's a must. It's imperative. All groups you should, right? You shouldn't be lazy. You should always drill down. But, you know, the weaknesses in pharma, big pharma. Look at biotech. Biotech's solid. Devices, solid. Take a look at this chart. Solid. Working towards an oversold position in near-term consolidation within the context of the uptrend. If I'm looking for ideas in this market, there are 15 bullish stocks that are holdings of XHE that I want to be taking a look at. Let's hit our market in a minute now. What are we writing about? I'm sorry, not market in a minute. Movers and shakers. Movers and shakers. Yesterday's S&P 500 gainers and losers. Fleer up 19% as it catches a bid from Teledyne, TDY, which was down 7.55% on that news. L Brands, nothing company specific to send the stock higher by about 6.5%. Newmont works to the upside with gold. It adds 5.4% on the day. Tapestry, nothing company specific there. L Brands, Tapestry, something going on in retail. Remember, there was a retail name on that screen that I showed you. Tapestry, TPR, up 5.24%. FTI, Drillquip, up 4.7% on the day. No company specific news. A little bit of a news vacuum that should end soon. We're going to start to get earnings, and obviously we're going to start to get into conference season as well, which is kind of interesting. TDY down 7.5% on that Fleer bid. Norwegian Cruise Lines, Carnival Cruise Lines, and down, likely COVID. We did hear that the UK is going back into lockdown. So obviously the travel leisure names want to be mindful of that. Norwegian down 6.5%, Carnival down nearly 6%. HWM, nothing company specific there. MGM, possible bid for a company called Entain takes 5.75% out of MGM on the day. Let's dig into it. Tech remains the leader. I know everybody wanted to kind of call the death of tech, but it's not. It was a near-term pullback consolidation within the context of the uptrend that could be reasserting to the upside. XLK relative to SPY, that's the black line, above the 50-day moving average in red, above the 200-day moving average in blue, breaking the downtrend line from that August-September peak. And what's interesting to me is never became oversold. In fact, the RSI of this ratio has not been oversold in more than a year. Now, the pullback couldn't produce an oversold position. Now we're working back top side, and we want to see whole 50. Whole 40 would be fine as well. That to me would be a sign to start getting aggressive back in the technology landscape, which is important. I think as well, something important to watch is this solid uptrend within semiconductors. And they're leading. I talk about it in my note today. This is an absolute chart of SMH trading near an all-time high. So if semis are strong, and in particular, if they're outperforming at an increasing rate, that's bullish. And we're seeing that bit here in the near term. So SMH outperforming is a bullish sign for the market, obviously a bullish sign for tech. Some decent looking setups within the semiconductor space. So if you're looking for ideas, I think you should be drilling down there. NVIDIA is starting to reassert TER looking pretty impressive. Synaptics looks good. Slab, right? These are names that are starting to set up that look pretty compelling to me. We want to take a look there. Defensive sectors lagging still, and this is what I was talking about. If you're worried about the market, there's a few things that you would expect to see. One of those things that you would expect to see is treasuries with a bid. That is not the case. And if you look within Shaken Analytics at the fixed income landscape, it's actually the riskier parts of fixed income, things like fallen angels, things like high yield, that are outperforming, that have bullish ratings within fixed income. And it's the safe havens, right? Your treasuries that are bearish and very bearish within our model. Taking a look here at the equity portion of that same theme, utilities relative to SPY in the top here, lagging below a declining 200-day moving average, getting close to setting new lows. REITs, those are actually 5-year lows in REITs. XLRE in a solid downtrend relative to the S&P 500, below a steadily declining 200-day moving average. Another defensive group, underperforming. And then staples trading down near 5-year lows as well. XLP relative to SPY below a declining 200-day moving average. And if you look real close to the right side of that chart, it's actually the 200-day is actually beginning to accelerate to the downside. So that's kind of interesting. Simple fact of the matter is it doesn't matter whether you're trading these or not. The message they send for the market is important. Treasuries under pressure, defensive sectors under relative pressure. Hard to get bullish on the market. In fact, I think we want to look for cyclical opportunities in things like oil services. OIH has a bullish ETF rating. Look at the setup here, right? Rally, pull back, rally, consolidate. For those of you who are into the pattern, cup and handle, look at the RSI pulling back but not cracking 50. Scooter working top side. Add in, right, for extra confirmation, the bullish rating. Services looks interesting to me. Wraps us up. Take us for a test drive. I'm back with you tomorrow.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.